Let's welcome Florian Ielpo to the program, head of macro and multi-asset portfolio manager, Lombard Odier Investment Managers. Florian, we had a pretty strong performance last week across global markets, but we are seeing a very different story play out this week. What is driving this leg lower in markets? And was that bounce we saw last week the result of quarter-end rebalancing from portfolio managers?
Yeah, exactly. Thanks for having me. The short answer is recession fears, and you've been discussing that point already. What we find very interesting is this sway, if you like, in the narrative that market are looking at. Last week was rebalancing, macro stabilization to some extent. Have we passed the peak of inflation? This week is of very different nature, and we see a rise in risk aversion, meaning that currently not the macro element, I would say, but sentiment seems to be in the driving seat, and we know how volatile it can be.
Are we in an environment where bad news is good news when it comes to the data? We are all watching the data so closely because central banks have made so clear that the path forward is going to be very data dependent. So is that the current paradigm?
We think so. We think that but currently bad news is good news because the market is pricing so much of this consistent push against inflation coming from central banks that every good bit of news means that the central bank will have to tighten more and more. If you've been closely listening to the Fed officials this week, it's been put in the market as news that they could be expecting 4% in the US as a terminal rate, which is not priced yet, which says how much they are willing to fight against inflation. The whatever it takes is no longer a question of saving the market, but pushing back against inflation at all costs.
Florian, if sentiment is in charge here at this stage, what is it going to take to turn that sentiment? Because it felt as though we had a glimpse last week when there were some hopes that we'd gone peak inflation. But if we look at the data this morning, again, French inflation at a record high is still climbing at this point. It doesn't feel as though we've got the devil in the detail yet that inflation has peaked.
2 points. The first is what could turn the market is first, a derating of earnings expectation. All we've seen so far is, according to us, only the impact of higher rates on bonds and the impact of higher rates on equities, and very small, I would say, derating of earnings expectation growth for the time being. So we need that push down, that final push down, that final capitulation, if you'd like, that we've never seen so far, to be able to be more comfortable entering back into the market. What we feel comfortable now, that's my second point, is to move potentially a little bit out of cash. Currently, we're holding very big cash pockets, 70%, into bonds. We think that where the pricing is correct is on the bond market, but not on the equity market. As long as we don't have that, it's going to be difficult to see a straight lift up in equity markets.